Good morning. Welcome to the XM.com weekly market update, and we're joined again by Pete McGuire from XM.com. Morning, Pete.
Lovely to see you, Andrew.
Good to see you back. To get into these numbers, first of all, the Aussie dollar has come off slightly from where we saw it last week, but it is pretty much languishing in a range for quite some time now.
Yeah, it's been a non-event really, going back to that early part of March. That 3-month window, it has been just a shock at a trade. There's just no action, and there's plenty of other markets, and that's where if something's not moving, then give it a good break.
Yeah, and I think with the tone coming out of the RBA at the moment, whether or not they're going to have any more rate rises, which they probably need at least one more, but when you're only going up 25 points at a time, it doesn't have a huge impact on the dollar.
No, it doesn't. And the other thing, it's been a good trade, the Aussie, against other cross rates other than the US.
Yeah.
Just that the US, it's just, as you said, languishing.
Yes. Moving over to the UK, CPI numbers are coming out. They're anticipating quite a drop in the CPI, which will be welcome considering how high the CPI is.
Yeah.
But it'll be interesting to see how that plays into their interest rate market as well.
Well, that's right. 12 successive rate rises. So they've certainly pedal to the metal, and we'll have to see what impact it's going to have when that number drops. So yeah, this week's going to be a big week for numbers.
Yeah, it certainly is. And still on the UK, you look at the pound there around that 124 mark. But if you look at over the last, 7-8 months, big rise.
What a glory trade. That is just incredible. So yeah, it's currencies are a place to trade. You can see why it attracts so many.
Yeah, for sure. Gold, once again, still very strong.
Yeah.
Just under $2,000, but still close to those all-time highs, and it's certainly that. And once again, if we look from a trading perspective, similar to the pound, going back that 6-7 month time frame, what a trade! What
a trade! It's just been incredible, and traders all over the world have just been on it. A big push to the upside, and it's volatile. I mean, you put that chart together only not too long ago, probably in the last 18 hours, and it's back at 1995, I think, at the moment. Gold.
Yeah, certainly moves around. Once again on gold, just having a bit of a comparison to the yen and the dollar. So once again, a clear standout.
It is a standout, and it's a standout because it's at all-time highs in yen, all-time highs in I think rupee, Indian rupee, all-time highs in euro, and probably for the Australian dollar also. So yeah, the attraction is global, and it'll be interesting to see how it all rolls in June and July. Yeah,
particularly with all the uncertainty around the debt ceiling, etc., because that's clearly going to create some volatility until that's resolved. And you would think with that volatility would be the attraction of gold.
100%. I heard that there's 91 countries meeting with in Russia in June about their currencies and to have gold backed. So this is going to be fascinating. And you've got the likes of China, India and Russia in there, so they're big heavyweight countries, and a lot of Africa. So going to be an interesting couple of months, Andrew.
Certainly will. And once again, with all the uncertainty around in the financial markets, obviously the US regional banks, which there are thousands of, clearly still under pressure.
Yeah. The chart tells the story, and we've just got to see how that materialises. The debt ceiling, let's just wait, and it's a waiting game. But if it's protracted and it doesn't get traction, I don't think it's going to do Wall Street a lot of good.
No, you wouldn't think so. And we can touch on that probably more next week as we get a bit more clarity about the debt ceiling, because everyone is saying 1 June, but there seems to be a
bit of a
window of when it can be resolved. So which I suspect could be another couple of weeks.
And I don't think it's that big a deal, really. When you think about it, they shut a couple of national parks under Obama.
Well, the reality is it's got to get resolved.
Yes.
Because if it doesn't, it'll be complete mayhem.
Yes.
So, but they'll get it done one way or the other. But it certainly creates that volatility, which particularly the equity markets don't like,
though traders do.
No, traders do. Traders love it, for sure. Once again, and this is a good chart looking at now. It'll be interesting to see what this looks like in a couple of months' time. But obviously, the equity markets have been a bit of a standout in the US this year, particularly the NASDAQ. A lot of money flowing back into those large tech stocks.
Yeah. I mean, you've only got to put your mind where it was in January and December, Christmas, and where it is now. It's been a fantastic 5 months.
Yeah, for sure. But once again, if we get some volatility in the equity market, you'd sort of think there'd be a bit of movement out of those, but which is interesting because they're just so strong and so cashed up that people tend to think they're a risky asset, those large tech companies, when in actual fact
They're not.
they're the blue chips.
Yeah, they are the blue chips.
Yet they come off, like some of them are off 20, 30, 40, 50% last year.
Absolutely.
And
Well,
they're making more money.
Yeah, the Nasdaq went from 16,000 raw figures to 10,000. So that's but it had a bounce.
Yeah,
It's bounced hard.
No surprise, money flowed back into them. So,
Yeah.
And this chart sort of shows it. So once again, the red there is the various indexes,
Yes.
how they performed year to date last year.
Yeah, 2022 red.
And the blue is how they have performed this year. So the Nasdaq 100 obviously was down 32% last year.
Yeah, got crushed.
Yeah, up close to 27%.
Come out, and we're only not yet 5 months in.
No. But at the other end of the scale, last year, the energy sector,
Was well up.
the complete opposite.
Yeah, $130, $120 oil, and we're thinking, is it going to hit 150? And now you're looking at 70, 75.
Yeah, that's right.
The Saudis aren't happy. OPEC's not happy.
No, it's certainly hanging around that lower level, isn't it? It's pretty sticky.
Yeah, I saw something on Bloomberg. The Saudi oil minister said speculators are not going to be appreciated in, I forget the wording he used, in the oil trade market. So by the sounds of it, they're wanting higher prices. We've got an OPEC meeting early June in Vienna, and do they look at additional cuts to get back above 85 to 90?
Yeah.
Because the US dollar's come off so heavily since
right.
then as well. So it's a double whammy.
Yeah, for sure. So, and 85.90, it's a big increase from 72, 73.
Yeah, and what impact naturally that has to inflation. So we got a little fun. We got fun ahead of us for the next 7 months.
Yeah, for sure.
Lead up to Christmas.
Yeah. Good stuff, but we'll keep an eye on things, particularly that debt ceiling. So as I said, we'll have a closer look at that next week and see how that's all unfolding across the markets.
Yeah, every day is exciting.
Certainly is. All right, well, thanks for joining us again.
Oh, it's lovely to see you.
Good stuff. Thanks, Pete.
Thank you, Andrew.
And that's the xm.com weekly market update.